All right. Welcome to Coffee Break Real Estate, episode 2. Today we've got an info-packed agenda. We're talking about our home buying game plan, where we'll give you the roadmap to success and some mistakes to avoid along the way when you're buying a home.
We'll also have a free roadmap from day one of your journey until you get the keys at closing. First things first, Danny, what are you drinking?
And today I just got some black coffee that I brewed in my Chicago Starbucks mug. Can't really see it,
Nice.
but
I see
yeah.
the
If whether you
skyline.
don't know, or if
Looks
a lot of
good,
you don't know, both Adam and I grew up together just outside of Chicago. Adam still lives there, but I'm in sunny
unfortunately.
Arizona now. Yeah. What's the temperature there right now?
It is 15 degrees with wind chill at 0.
Wow. All right. I was gonna say at least it's positive, but it's 0, so no.
No, it's 0. We're neutral.
It's a nice let's see. I think it's about
I don't want to
73
hear
degrees
that.
here in Phoenix, so yeah. But I am leaving Phoenix. I'm moving to California soon, so we'll talk about that. But yeah.
Poor guy. Yeah, we'll talk about that
Yeah,
another
I
time.
know.
All
Yeah.
right, let's jump into it.
All
Tell
right.
me first, what's the deal? Something that happened, like a deal that looked great, but then it fell apart during like inspection, title, stuff like that.
Man, mostly I see those during inspection. I've actually had houses under contract where things look great and you feel like the inspection's gonna be clean. And, a personal house that I was buying once had all dry rotted wood in the attic. So, sometimes after an inspection, you go through and decide, hey, I just want to fix these things, but with something like that, it was like, nah, so that was a big one. That was one where it was like, I don't even want to see this rebuilt. I just kind of want to move on to the next house. So yeah.
Let me ask you, so, you know, what we do at our work is we try to keep stress level down, excitement level up. But what do you do to set expectations for somebody that just goes under contract that's super excited right before they do an inspection? How do you temper their expectations for the inspection report?
I think the main thing I say is, I know this is an exciting moment, but nothing's done until it's done. I've seen it countless times, especially when we were on the investing side. Things a lot of times don't go through. Most of the time they do, but there's definitely circumstances where they don't. You have inspection, appraisal, you have underwriting, as you know. So there's a lot of things that can happen along the way. So I just set expectations and say, hey, like we should celebrate, because this is a win, but we still have a lot of hurdles and a lot of things to get through. This is, there's still a lot of hard things to do. Obviously looking for a house is hard, but once you're under contract, there is a lot of steps to go through. So you just kind of set that expectation and let people know that, hey, things can happen where we don't close. So I like to,
Definitely.
what is it? Under, what's that saying? Under
It's
promise and over
under
deliver.
promise. Yeah, there you
Yeah.
go. Okay. So with the client that we have right now, I know you and I are working together on it, and what we do is we set up kind of like checkpoints for the buyer, right? First thing is getting the
Mhm.
offer accepted. Second thing is going under inspection, getting everything done with there. And then, next steps is, appraisal and getting the stuff, documents over. But each thing has a checkpoint. And I feel like we let them know, we get them excited for that end goal, but we have to kind of take it step by step, just like what they say, how do you eat an elephant? One bite at a time, right? No matter how big or small the hurdle. So that's always good to temper. What about, let me ask you, during inspection time, a lot of people always look at the minor things, right? What do you tell them like beforehand as far as the inspection report, right? Because like you said before on our last episode, you said the inspector's job is to find everything wrong with the home. So
Mhm.
how do you kind of temper their expectations on the inspection report? Because, there's hundreds of things that pop up on there.
Well, for one, is I do recommend an inspector that I work with a lot. He is really good at doing that. He tells people during our review, he's like, "Hey, the report's gonna look scary. There's a lot of things on there. He's like, during on my review, he's like, I'm just gonna go over the big things. And even then, there's things he brings up and he'll say, hey, you don't have to do anything about this, or this is really easy to fix, whatever. So I think having a good inspector that is not just a good inspector at looking at the house, but also someone that can communicate well with others is really good. So I use someone named Brad out here. Love him. He's really, really good at communicating, so it makes my job easier. But I'm also there during that review always, either me or my partner Paul. And we both have done a ton of remodels, so we know what to look for and just how to properly write out those or to let our clients know what to expect when they're going through that report. So normally you do a review in person and then they get the report later on. Yeah. Um,
Cool.
yeah.
Yeah, that's always
Cool.
important.
Well, yeah. But also, so okay, before the inspection, let's back up. Let's go back to the beginning, right? Like someone has a dream of getting a house, and a lot of times they reach out to me first. Normally, a realtor is their first point of contact. Obviously, some people might personally know a loan officer or mortgage advisor like yourself and reach out to you first, but I would say more often than not, people reach out to a realtor first. My first thing that I tell them is that, they want to own a home. I'll talk them through a few things, but my first question is, are you pre-qualified, right? And do you agree that that's probably the first step in buying a house?
Yeah, 100%. That's got to be the first thing they look at to see if they're pre-qualified, or how we like to do it is a full pre-approval. Doing that because then your job is going to be you're going to be doing something with kind of like a blank canvas, right? You don't know which route to take. You don't know how to set up a game plan for them unless you know what they can qualify for, or if they can qualify at that direct time, or it has to be something 3, 6, 9 months down the road. So, yeah, the first thing to do is get that pre approval, talk to somebody like myself, and then I will be able to relay the information to the borrower based on what they're qualified for, what the maximum amount is. And then also I dig deep and see what their comfort zone is and kind of let them know what both are. And then I relay that information to you.
You said two words there, or two different, you said pre-qualification and pre-approval.
hmm
And just so our listeners know, is there a difference between those two? And if there is, what is it?
Absolutely. So a pre-qualification, what that is the only thing that we're verifying, and sometimes lenders don't even do this, is we're verifying the credit report, and then we go by the verbal kind of confirmation from the borrower. So they could tell us, hey, I make 200,000 a year. I have 200,000 in my bank account and my credit score is a 750. Well, that sounds great. Some lenders will do a pre-qualification for that and then give it to the realtor. In my eyes, I never do that because I feel like it's doing a disservice, not just to the borrower, but also to you, because my job is to make your job easier. Okay. So I don't want any empty miles that you're driving. I don't want any lost time because, time is money and I don't want you wasting it unless you know exactly what's going on. So a pre-approval is everything is verified with documents. We do a credit report, we review it, whether it's a hard pull or a soft pull, depends on what kind of loan program they're looking at doing. And then we
What's a hard
also
pull and soft pull?
so a
Sorry to
hard
cut you off,
pull
but
is no, that's a great question. So a hard pull is kind of when you get in a hard inquiry. So you get your credit pulled and then it could ding your credit score by up to 1 to 2%. So if you have an 800 credit score and you pull your credit, don't get scared. Your credit score might go down by 8 or 10 points, which is not going to affect your interest rate that you're going to get or your qualification. If you do a soft check, a soft credit pull is something that does not ding your credit report. Lenders and banks do not get triggered to reach out and give you a call and bother you and solicit your business. It's just literally kind of doing like an overview of your credit report and no inquiries. But sometimes there is a drawback of doing a soft credit report because I've seen soft credit reports come not detailed. And then when we did the hard check, we saw some derogatory marks on there because of the details that the hard pull does. So depending on the
got it.
borrower, we'll decide on what to do. But going back to a pre-approval. So pre-approval, they tell me they make 200 grand a year. Great. Show me your last month's worth of pay stubs. show me your last 2 years of W-2s, and then you have 200,000 in the bank, great, send me your last 2 months bank statements. Once I do that due diligence right up front, it allows me to do my job better, and it allows you to do your job better and have the borrower happy and well informed.
All right, cool. Yeah, so and I do prefer that as an agent. A pre-approval is huge because, like you said, a pre-qual, you could have that piece of paper and it suffices for submitting offers, but I might be wasting my time, the listing agent's time, the seller's time, the buyer's time, if, I just have a letter based off of what a borrower or a potential borrower told you instead of actual checks and balances that you've made. So we always appreciate a pre-approval for sure.
Definitely. And another thing I would want to say is when you're in a multiple offer situation, if you go in with a pre-qualification, listing agents, in my experience, literally rip it up, metaphorically, rip up that offer and don't even look at it. No matter how strong it is, if you have a pre-qualification versus a pre-approval, garbage.
Yeah, I agree with that for sure. I mean, there's a lot of things you look at with an offer, and that's the strength of financing is huge. So, um,
Definitely.
but after you look at someone's credit and income, then what do you look at next? Let's say that you have a pre-approval, they're good to go. They've showed you their pay stubs, and you've pulled you've done a hard pull, and they're good to go. So now what conversation do you have with buyers?
So once I get that done, so again, I work in checklists, checkpoints. So I get on a video call if I'm not meeting in person with the clients, get on a video call. After this happens, we do something called a pre-approval call. Pre-approval call, we go through literally what the maximum amount they're approved for, and I show them what amount they should start searching for a home based on the criteria they gave me on their goals. So if they tell me I want to be at $3,000 a month and I'm putting $50,000 down payment, great. I show them on my calculator on my website, this is the amount that we're looking to be around. So I give them their max and then I give them what their goal is. And then I always ask them, what is your comfort monthly payment? And what is the maximum monthly payment that you're willing to go up to? So then we know where to stretch it up to. Because if it turns out to be a $400,000 home, and let's say they see a home for 420,000 that they love, right? Then I could be like, okay, hey, Joe, this is at your monthly payment is going to be at the max of what you're willing to pay. So if
Sure.
you love the home, I want you to ask yourself, is this worth it to go stretch my budget to the max to be able to get my dream home? And I leave that answer up to them.
It's really smart. Yeah. You see a lot of people, they have a max approval because, the bank will lend them, let's say 800 grand, but that's a good combo that I'm glad you have that conversation with them because I know some people wouldn't want to have that monthly payment for an $800,000 home. So even though on paper their max is a lot, you want to know where they're comfortable monthly to make sure that they're not thinking, "Hey, I could go look at $1 million houses." Right?
Exact,
Okay.
exactly. And I literally had a
Yeah, that's
conversation
smart.
with somebody last week about that as well. They were able to afford 1.1 million, but based on their goals and what they wanted to spend and how much they wanted to reinvest the remaining funds that they get, they were at a $750,000 price point.
Yeah. Yeah,
So
we
it
see
worked
that a
out
lot.
great. Yep.
Very nice. Cool. So then after that, what questions do you ask them, or what's the next checkpoint?
So after we do the pre-approval call, and let's say you go out and about looking at homes and stuff, right? Before, as before the offer goes in, you and I, or, the lender and realtor will kind of strategize. The reason why it's not for us to step on anybody's toes, but it's kind of able to use my knowledge on the financing side and your knowledge on what they're looking for in a home and kind of mesh that together to be able to put in a strategic offer, right? So sometimes somebody barely has enough down payment and closing costs to cover everything, right? So at that point, we could offer a full asking price or above asking price and ask them to give us some seller credits, right? Sometimes that's not the borrower's pain point, so we go a different route. So for example, well, actually, let me ask you really quick, as far as an offer goes, what kind of strategies, like if you can just give me one little nugget on what kind of offer strategy you would do, for a buyer? Any scenario.
Um, so it really depends on the scenario, I think, right? But there's a lot of what I like to call levers that you can pull. So there's a ton. So obviously price is the biggest one. So that's usually, the biggest lever that has the biggest perception, I would say. Like people look at that the most, especially sellers, but not always, right? So there's price, there's closing date, there is earnest money. I like that one a lot, and I'll get to that in a second. But there's what else can you get seller concessions, commissions. There's a lot of different levers that you can pull on your offer, right? And I like to look at both the buyer situation and the sellers. That's why before I make offers, I like to call agents. I don't like to just write up offers and send an email. As a listing agent, I'll get that sometimes and I'm like, "Cool, that's fine." I like to feel the situation out, right? Because you might talk to a seller that wants to close in 3 weeks, right? And it's like, "Okay, cool. Well, if you want to close in 3 weeks, then our price is going to have to be lower." So that's like, again, different levers you could pull. You might have a seller that wants to wait, 3 months, and you didn't know that without calling them. So I like to know the seller situation and also my buyer situation, right? Like the file we have open right now and we're under contract on. Our buyer didn't they're doing a hefty down payment and didn't really care about closing costs or getting credits, right? So we didn't go in with an offer that had a higher purchase price with some credits that can help them with the money they have to come to the closing table with. They were just like, "Hey, I don't really care. It's just at the end of the day, it's a net number." So we just went with a lower purchase price, right? So I just look at, like I said, look at both people's scenarios. Obviously, the seller scenario you don't know, and sometimes the agent won't spill everything out. Excuse me, but um, a phone call with the agent really helps know what levers to pull.
Yeah.
Earnest money I like a lot because earnest money is mostly refundable during an inspection period,
Hmm.
and it credits towards the purchase price, right? So if you have some cash, I like to go with a hefty earnest money deposit because really at the end of the day, you're not it's not going to change much. Now, unless you cancel last minute and you don't have a contingency to cancel, then the higher earnest money becomes an issue. But really, it's just the same thing. You're spending that money regardless. So if you can swing that, I like doing that because it shows that your offer is stronger. But at the end of the day, the net difference to you is not much, right? And then commissions, you can negotiate commissions. Go in with ask for less or more. But I don't really love doing. I don't love shorting people on commissions. So that's not really a lever I love to pull, but you can. And then financing. I mean, that's a big one, right? Like you said, the pre-approval versus the pre-qualification, or cash if you're buying cash. That's like, so some people might look at an offer, like the highest price doesn't always win in certain situations. Sometimes it does, and I'd say most of the time it does, but not
That was my
always,
next
right? Like,
question I was going to ask you.
yeah, it's not
Is it a
always like
myth or fact? Highest offer always wins.
it's a
Is that
myth
a
for
myth or a
sure.
fact? Okay.
Myth. I mean, we saw it a lot we still see it when people move here from California, right? They sell their $3 million house in California, come here and buy $1 million house cash. Now the seller looks at $1 million cash offer or a $1.1 million financing offer. And, most sellers are probably going to take that cash offer. I know when I flip houses, if I have a cash offer, that holds a lot of weight because like we talked about earlier, deals fall apart. And one of the areas deals fall apart in is during the financing contingency, right? Like
Hmm.
because their appraisal could come in lower, or like we talked about on our last episode, the buyer can go out and buy some furniture that makes them not qualify for the loan anymore. Yeah, cash offers are really really strong, and I feel like when you have a cash offer, sometimes price matters a lot less. So
Okay.
yeah,
So
so it's
let me ask you
definitely a myth.
this. Yeah. So we got that. We got that with a lot of backup, a lot of
Yeah.
backup examples. So let me ask you this. So once you're under contract, is the hard
Hmm.
part over?
No, definitely not. For sure not. I mean, like it is hard getting under contract, right? Like it's not super easy, but it's not the hard part's not over. There's a lot of things you have to do after you're under contract. Start with the inspection. You got to review disclosures. You got to review clue report, which is insurance claims in the last 5 years. You have to now start working with you a little deeper, right? As you know, you got to start getting your ducks in a row, getting all your documents in for to your lender. You got to go out and reach out to insurance agents. So I think, getting under contract is definitely, a win, but it's not. I would say the hard part's not over for sure.
So I like to look at it like kind of like we're going on a road trip, right? So we kind of take turns driving, you and I.
Yep.
So first things first is, when we're getting the documents and everything ready for a pre-approval, I'm in the driver's seat. And then you're in the driver's seat once you get the pre-approval and you're out searching for a home until, you put an offer, it gets accepted, get the inspection report. And then after that, I feel like I'm in the driver's seat doing the things that I need to do. But besides when I start taking over the wheel until closing, let me ask you a question because I've heard this a lot. I've heard of people trying to, like in a multiple offer scenario, let's throw a number out there of a $600,000 house. Say there's 5 offers on it. Somebody does an escalation clause to like 660,000 and they win the bid at 660. Okay. Then the realtor kind of informs their buyers like, hey, let's do the inspection report and then we could try to get some money back after, claiming some things need to be replaced or repaired. One, do you see that often? And two, are you able to like negotiate for anything you want during an inspection?
I do see that. I wouldn't say often,
Okay.
but I do see that. I think if someone's going into a contract with the intent of negotiating during inspection, um, obviously you do negotiate a lot of times during inspection. Like I said on the last episode, not every house is perfect. So there's things that come up, right? And you want those fixed as a buyer. However, if you're going in with an offer that's higher than what you actually want to pay, with the mindset of, hey, I want to negotiate during inspection to get it down to where I want it. I feel like that's unethical. I don't really love when people do that, and it's usually pretty clear when people are doing that. Um, but yeah, so I don't see it a lot, but you do see it for sure, and I don't think that's a great approach. Like I don't recommend expecting anything during the inspection period. Now, going back to your question, can you renegotiate anything? I mean, you can, but there's certain times where it's a slap in the face, right? Like if you have a bunch of minor things that come up on the inspection report, stuff that you probably have already seen, cosmetic stuff or whatnot, and then you ask for a lot of money that's not in line with how much that repair would cost. Yeah, I think that looks really bad and can, real estate can be very emotional too. It's not just factually driven, so it can get a little emotional where the seller might get a little upset that you're asking for that much off and this and that. So no, I wouldn't say everything's negotiable. You have to be, like I said, there's things wrong that you want fixed, right? And that's completely fine. So there is some negotiation. There is some back and forth during the inspection period, but it's usually stuff that is warranted, I would say.
Okay. Let me ask you during inspection. I remember you telling me something. I'm sorry, I can't remember. It was for an Arizona property, and the property had termites. Is that common in Arizona homes?
But yeah, very common. So this is
Okay.
one thing.
That's
So
not
I
something that
obviously,
people kind of know, right?
yes. No,
Okay.
well, no, exactly. And if you come from the Midwest, like we did, you hear the word termite and you get very, very scared.
You're running.
You're running. Exactly. There's a few differences in, I think the type of termite is a little different, and also in Illinois and Indiana, which so a lot of our clients, move from Chicago to here. So I deal with this a decent amount. You have to explain to them that termites are different, right? I think in Illinois, the termites you don't notice for a while. And so when you do notice them, there's a lot of damage already done. Now, in Arizona, if you leave a house untreated for a really long time, it is bad, no doubt. But our termites do less damage, and issues are noticed a lot sooner. I think it has something to do with our foundations. Don't quote me on it. I've done a little bit of research on it, but our termites here will show mud tunnels, what they're called. A lot of times you'll see them coming out of the ceiling. It's just like this dirt thing just coming out of the ceiling, and you see that or you'll see them along the wall, right? You'll see like it's literally called a mud tunnel. It's like a strip of mud you'll see on the wall. And the second you see that, you call a company, they come out and treat it. It's like under $1,000. They pretty much treat the whole exterior of your house and knock out those mud tunnels or whatever. Termites go away. A lot of times you'll get it back in the next 5 years. The first house I ever owned, it had termite damage when I bought it. I treated it when I first bought it, and then like 5 years later, I had to treat it again. So termites are very common here. It's a scary word, especially for our Chicagoland buyers. My inspector, Brad, that I usually use, he's from Indiana.
Shout
Another
out to
thing that,
Brad.
yeah, Brad. Brad does a very good job at explaining that, hey, termites here are not. He says the same thing. He's like, man, when I first moved here from Indiana, he's like, I thought termites were horrible, but there's a difference here for sure.
You could take away a lot from that. So what I took away is that an average home buyer can get deterred from buying a home if it has termites. And it's great that, you bring that up, that it's not a bad thing and it's pretty common in Arizona homes, especially when people are relocating from other states like you did and like how Brad did. Now, here, if you hear the word termites, it's done, right?
Yeah,
It's like, all right, cancel the deal. We're done. We're going to move it onwards. Another thing that came to mind was when you were talking about those mud tunnels. Is that what you called them?
yeah, mud
Was it the
tunnels.
same thing that happened in Bad Boys 2, the movie, where Martin Lawrence and them were on the attic and they were digging and then the dirt was falling on Johnny Tapia? Is that what happened?
Yeah, yeah. No, I think that was a little different. Those are rats,
Okay.
remember?
There were rats, yeah.
That was
Marsupials.
just that,
Okay.
that marsupial.
All right, cool. Awesome. Well, that's good to know. That's a good takeaway to have,
Yeah,
especially on the inspection side for sure.
yeah. Like I said, it can. There are if a house goes untreated for a really long time, it can turn into something bad, but usually not. So
Okay. Awesome. So
yeah,
just to recap here, that step by step that we just went through. So first thing is kind of having that credit and income reality check. Next thing was the budgeting, payment comfort, payment max, and then the down payment, closing cost strategy, and pre-approval, pre-qualification, offer strategy, offer approval, and then the inspections, repairs, negotiations, and then the appraisals, underwriting, and stuff like that. Cool. Awesome.
well, let's go
Anything you
into
want to
that.
add
Let's
to
go
that?
into yeah, always yeah. So after the inspection, I mean, so what's now you're driving? So like on our current file we have right now,
Mhm.
inspections are done. I've kind of been in the back seat, hanging out, eating snacks. What are you working on now? So what do you have left?
So honestly, with one of our things, with one of the levers that you did pull was because of your hefty down payment and you didn't request a lot of things. One thing you did was you requested a 45-day close, correct?
Yes.
Okay. So 45-day close, just so the average person that's listening to this, 45-day close is kind of on the higher end. Usually what they say traditionally is about 30 to 35-day closing. Of course, if
30,
you need
yeah.
to get it done quicker, 20 days, 15 days, depending on the scenario, what type of home you're buying, it could get done. But in this situation, Danny was able to get a 45-day close, and I remember the listing agent was kind of pushing back on that, but Danny is a strong negotiator and he actually got it. So the 45-day timeline gives me a lot of leeway, but luckily I didn't need it. And, we're going to be closing in a month from now, and we'll probably have the clear to close next week. So we'll be about 3.5 weeks early. But after the inspection's done, once I get the A-OK from the inspection, first thing I do is order appraisal. Okay. And if it's a condo, I order the appraisal and a condo questionnaire. So condo questionnaire, I want everybody to know that when you're buying a condo, there's extra steps to take. Why? Because the lender is not just approving you as the buyer, they're also approving the HOA, the homeowners association. The property management company that's running it has to run a clean condo association. Can't have $0 in the bank in the reserves. You can't have a huge HOA and not have the money show for it. You can't have certain things that are not passing code, electrical boxes, plumbing leaks, anything like that. So if you do and the lender sees it, they're going to be iffy on approving this file. So you could be an A plus borrower, But if the condo association's bad, you're not gonna get approved for it. And I don't want you to take it personally because it's not about you.
The
But
lender's
yeah,
just trying to
after the
protect themselves, right? Because
exactly,
in the
exactly,
event something happens, they want to make sure that there's an asset that's strong behind backing
exactly.
the money they're lending out, right? Okay.
Exactly. So imagine a borrower is putting 10% down. Don't forget the lender's putting the other 90. So they have
Yeah.
a much bigger risk applied to it. Appraisal, and then we're getting all the documents in. They're called conditions. So certain things I'll name out as, getting updated pay stubs, updated bank statements. The tax returns need to be shown. Homeowners insurance needs to be purchased. So we talk with homeowners insurance agents, and then we get everything ready for the three magic words that everybody wants to hear. It's called clear to close. Once those three words are said out of my mouth and sent via email, everybody starts breathing easier. It means everything is clear, everything is ready to go for closing. Some surprises that I would see, Danny, during this is, of course, the home getting underappraised
Yeah,
because,
so
as you know,
that brings me
go
to a
ahead.
point that I was going to ask, just for
Yeah.
so people know, like obviously, well, what is an appraisal and why does the lender require an appraisal? What's the point of an appraisal? If the seller and I agree to a price, why does the lender want to know how much the house is worth?
Yeah, that's a great question. So the lender, remember, they're taking on most of the risk. So if you're paying $400,000 for a home, buyer and seller agree to that price. The lender wants to make sure that the home is actually has a market value for that price. If the home comes back and it's appraised at 380,000, the lender's not going to approve a $400,000 purchase. Now, when that scenario happens, the buyer has three options, right? They could say, okay, the lender's going to say, for example, me, I would say, okay, look, the home came back at 380,000. You agreed to 400,000. So you have to pay that difference on top of your down payment and closing costs. So whatever you're planning on paying, you have to pay that extra 20,000. Option
Because I don't
two,
want to lend, I don't want to lend that money on that
exactly.
because
That
I need to
collateral
keep
has to be
myself
put in.
protected. Yep.
Exactly. So we need that collateral to be given up front. Once, or that option is one. Option two is going to be for you and a listing agent to negotiate. Say, hey, it's worth 380,000. My borrower doesn't want to pay 400,000. So it could be another strategy for you to be like, hey, listen, do you want to put this home back on the market and have to explain to other buyers why it came back on the market? Or can you take off that 20,000 off the price, or take off 15,000? We'll cover whatever. You're the negotiation master on that end. You could do that. And then the third option is to walk away from the deal.
Okay, that makes
Those are
sense.
the
That
three
reminds me
options that
too,
happen.
the levers we talked about earlier. I mean, you brought up an escalation clause. Um, which is if you get other offers that are higher than mine, I'll come up to that to match that offer or beat it. So that was one lever that I didn't mention, but you just brought up another lever is appraisal, right? Back in 2021, or 2020, people were waiving appraisals. So what they were saying is, hey, I don't care up front. They were telling the seller, I don't care what the appraisal comes back at. I will pay this X amount, right? So that's like one of the three options you said, but talked about upfront. So that's another lever too. Or some people would say, hey, I'll waive appraisal up to 10,000. So if they're buying the house for 400 and it comes back at 390, they'll still buy the house, right? But so yeah,
Yeah,
you
appraisal
reminded me of
gap,
that too. Appraisal gap. There you go. Yep. So
definitely.
yeah, but that's
So once we get that clear to close, what happens is title company starts getting all the documents together, making sure everything is balancing, which means everything that the buyer's paying and everything that the seller's paying has to match to the penny. Now, while that's going on, Danny, what are you doing on your end in the background?
I'm just maintaining communication, I would say, for a while. It's just making sure, answering any questions that come up from the listing agent, from you, from the buyer. And then the big thing that we do at the end is obviously coordinate with title. A lot of title companies do a really good job of coordinating everybody, setting everyone up for signature. But I'll review settlement statements. So I'll make sure going line by line, making sure that our buyer is not paying too much for closing costs, or the closing costs are split the way they were supposed to, and just making sure the settlement statement's good. And then doing a final walkthrough. So obviously at the beginning you do a big inspection. This is like, hey, what's wrong with this house? The final walkthrough is not, it's nothing like that. It's usually just walking through the house to make sure that it's in the same condition that it was that when we bought or when we went under contract, right? And that's more so you're not going to nitpick stuff that you find. It's more so, hey, is the dishwasher still working or is it still there? Like,
Yeah.
yeah, stuff still there that was there before? Is the fridge still there? Is the washer dryer still there? If you agreed to take those things on, right? Is there not a hole in the roof? Is this like if if there's something big, which I've never seen, but then you can go back to the seller and kind of figure things out. But some people waive final walkthroughs. I'm not a fan of that. I always make sure that my buyers do a final walkthrough because, especially on this one that we have right now, 45-day close, a lot can happen in 45 days.
Anything,
Especially
yeah.
this house is vacant, so a lot can happen in that 45 days. Or even if it's not vacant, some stuff can break and things like that. So,
Quick story, I had somebody in the final walkthrough discover that the home was trashed, where they cleaned out all their stuff, but they didn't clean up. And another home, somebody took the refrigerator and they were not supposed to.
hmm
That delayed closing by 3 days.
yep, that
Either
happens. Yep.
getting the fridge back, or they had to give a credit to the buyer. And
Yeah, I've
after
had
it took 3 days.
yep, I've had curtains missing from a house, but that's small, so we just got a Zelle for a
That's
couple hundred
good.
bucks and called it a day. But yeah, there's stuff that was supposed to be there that isn't. But
Yeah.
yeah.
Awesome. All right.
So
Next
well,
thing on
yeah,
the
that's pretty
agenda. What
much
is
it,
it?
right? Like that's the process, right? Overall, like
Pretty
high
much.
level. Obviously, there's nuances with different deals depending on situations, but I think from a high level, that's pretty all encompassing, I would say.
Yep.
All right, next up on the agenda. During this process, we obviously already talked about some of these, but what are deal killers, right? What are
Wow.
things that can destroy a deal? Like, what do you see on your end?
Okay. So I'll talk strictly on my end. So 5 things. I'm gonna give you the top five. One, buyer getting overzealous, going to buy a new car, going to buy furniture, opening up new credit cards and going shopping. It all depends on the time of the year. I've had clients open up credit cards around Christmas time so they can go shopping for their loved ones. I had a person literally buy $12,000 worth of furniture about a week before closing, and they went from approved to denied. Remind you, we strategized that deal where they were literally right under the max threshold that they can get approved for, and then that caused them to get denied. I actually had recently a borrower that was pretty smart. He had a lease coming up, and what he did was he talked to his dealership and he said, "Hey, extend my lease out for a couple months until I close the deal on my home." And they were like, "Yeah, we're fine." Because one, he said, "I'm going to buy it out, but extend it out
Can't
for a
yet.
couple months and then we'll
Yeah.
we'll make the adjustments later." They said, "Great." Just so he doesn't get a hard inquiry, and just because, if he buys it out, his payment's going to be probably the same, maybe higher, but we don't want any changes or any new things to
Changes.
pop up like that to cause issues. Another thing is, which is a big no-no, and I want people listening now, do not put large deposits into your bank account. When I do my due diligence and I ask people, how much money do you have allocated to purchasing the home, down payment and closing costs? If they tell me 50,000, I ask them, where is that 50,000 coming from? Is it a bank account? Is it a brokerage account? Is it an investment account? Is it a gift from a family member? Is it from under your mattress? If it's under their mattress, right away I tell them, we are not, if you put all that money in, great. We're not able to use any of it. So don't even bother. So unverified large deposits is a big no-no. The next thing is when they're home shopping, let's say they're capped out, right? They're almost at that threshold of getting qualified, but then they start looking at a home that has an HOA now. So we have to throw that $100, $200 towards the debt. It's not going to help them. Or let's say they buy a home and we're in the process of getting the homeowner's insurance, and we see that the roof is over 15 years old. So the insurance agent is going to account for that, right? Because they're going to know this person is a new homeowner. He's going to end up filing a claim at some point. So what they're going to do is they're going to account for it, and they're going to up their monthly premium or annual premium. So that could be something that can cause an issue with their approval. So that's one, two, three. Fourth is having these assumptions that don't match with our guidelines. One of them could be the large deposits, right? One of them could be switching employment, right? Where they could be like, hey, I'm making more money. Why can't I switch jobs? Well, dude, you're going to stop your job and you're not going to start the other one for a month, which is not really a problem sometimes. But between that month, you're going to have to do things for the new job. You're going to have to do a background check, right? Fingerprints. You're going to have to go to orientation, stuff like that. That can cause delays. And the last thing that I'm sure a lot of people do, maybe they shouldn't do up unless they're doing it up front. So I always say rate shopping, do it in the beginning, because someone like myself, we're trying to make the process as smooth as possible. Okay. If you start shopping, rate shopping, do it before you get a pre-approval.
What do you mean by rate shopping?
Or rate shopping is, let's say, for example, you and I have been working with a buyer, okay, and we get under contract. I give them an interest rate 6.5, and they say, okay, great. We're going in process, and then they go shopping with another lender and say, okay, can you beat 6.5? They're going to say, sure, I'll give you the closest thing that's lower, 6.375, okay, which is a $20 difference a month, let's say. So when that happens, that can cause significant delays in the process. It can cause um, that 6.375 rate to actually go up. Because let's say, for example, I did a credit report 2.5 months ago. Credit reports are good for 3 months, 90 days, right? So let's say something happened during those 3 months. After that 3 month is out, the new lender is going to pull credit again. And let's say their 750 went down to a 710. They're not getting that same rate, right? So that's going to cause distrust factor, and it's going to have to cause the lender to do everything over. It's going to have to cause us send over appraisal transfer to go from one lender to the other. Condo questionnaire, if it's a condo, we have to send that over if they allow it. Otherwise, the buyer has to reorder it, and they're expensive. They could be anywhere from, $300 to $600. So rate shopping, I would say, do that up front. And what I like to personally do is I like to go through everything in detail to the borrower so they know what to expect. So there's no surprises. If there are surprises, they're good surprises, not bad ones. So those are the top 5 things that I see. What would you say that you see on your end?
Honestly, most of what we see is financing, right? So it's a lot of the stuff that you talked about. Um, a lot of times people switch jobs or sometimes lose jobs. Sometimes it's out of your control, right? But things do happen with financing mostly. On my end, I would say, inspections can kill a deal, but that doesn't kill like the whole file. I would say just maybe for that certain house.
Hmm.
And then you see buyer's remorse sometimes or a better house coming up or something, but usually it's just on our side it's usually just inspections and all the financing stuff you talked about. So I'm always letting people know the same thing that you are about, hey, don't touch any of your finances, don't switch jobs, um, don't deposit a large amount of money, don't, even paying off debt, right? Like I always tell people, like, go with your talk to your mortgage advisor first, like before you do anything, even if you think it's a good idea, like it could change things that you don't want to change.
Yeah, I'm glad you mentioned that because that's a big deal. I have people that are sometimes they want to pay off their credit cards, but they need to have reserves, right? So let's say they need to have 15,000 in their bank account after they pay their down payment and closing costs, right? They need to have 15,000. But if they have a credit card that's 10,000 and they use that money there, that's going to cause an issue. So I'm glad you brought that up. That's a game changer.
And then as far as jobs go, I know for most loans, like lenders want to see someone working for 2 years. Is it out like is that right? 2 years?
For the most part, yeah, two
Okay.
years of
Is it at the same company, same industry? Like what do lenders want to see? Because if you're bouncing around from job to job, does that look bad, or is it fine if it's in the same industry? I've heard different things, so I just want to see what you've seen.
yeah. So switching job to job, depending on what type of loan you're doing. So if you're doing an FHA loan versus a conventional loan, FHA loans they kind of have like a cap. Like, okay, you can't switch more than three times in the last 2 years, right? Conventional, they kind of look at it more holistically, right? Why is this person switching jobs? Are they in the same industry? Are they moving up every time they get a new job? Or are they staying the same? Or are they moving down? So it all depends. Like some people could be W, but they're contracted, right? So they could be working with one company. Let's say somebody does IT, right? And they're working for, let's say, a bank. They're at Bank of America for 6 months. Okay, so they're getting paid that way. Then after 6 months, they go to Chase. They're working there for 6 months. That's okay. That's nothing. That's not a big deal. You don't have to keep the same job for 2 years, but it does get more strict when you're self-employed. Self-employed means you get paid a
Yeah.
1099 or you're own your own kind of business. If you're a C corp or you're an S corp, something like that, it gets more strict. And then there's also, we'll talk about this in another podcast. If you're switching from W 2 to 1099 or switching from 1099 to W 2, um, it could be okay being less than 2 years and stuff. It all depends, but
Okay.
we'll get to that on another episode.
Yeah. Cool. Man,
So,
we've
what do
talked about
you,
a lot.
I know you
Great.
said action packed, info packed.
Yeah.
What do you wish, and this will be the last question I ask you, what do you wish buyers knew before they start looking at homes?
Ooh, man. I think one thing I see a lot is pictures either not doing justice or doing a little too much justice.
Mm,
So I always recommend people view homes. Most buyers do, but sometimes people want to put in offers without seeing them. But on this search that I was doing for our buyer, there was lots of homes that looked really, really, really good in pictures. You get there, and man, those pictures were hiding a lot of stuff, right? Whether it's
it's
smell
always the
or
case.
like damage that you didn't see, and then conversely to that, there's houses that don't have really nice pictures, but you go there and you're like, wow, this house is really nice. So there's a lot of that. I wish some knew, time is of the essence for a lot of houses in this market. If houses are priced correctly, they're gonna move pretty quick. And depending on the price point you're at. If you're, in Phoenix sub 400 grand, man, if a nice house pops up and it's priced good, it's gonna go quick. So I like to I don't want to like rush people if they're not comfortable, but also, hey, we got to move. If you find a house that you like and it's priced good, and sometimes I'll let you know, hey, this is priced good. Like, you might be dealing with other offers. Don't come in too low. People are always trying to, especially in this market, think, oh, I could get a better price, which a lot of times you can. And I'll always submit whatever offer my clients want me to, but I try to educate them on this is priced very well, and it's priced in a or the price point is in a market where a lot of buyers are going to be after this, so we got to move quick and not really mess around and try to split hairs over a few grand or something like that. So
Gotcha.
yeah, I
Sweet.
think
Did you
that's
wanna did you wanna add anything else before we wrap up?
I guess what same question to you. What do you wish buyers knew before applying for mortgages? I know we talked a lot about that. Is there anything else that you could
Oh
think of?
yeah. Um, some things that I wish they knew. Kind of the stuff that we talked about earlier, right? So kind of like one tip that I would give is if a loan originator or mortgage advisor, the more they promise you, the more you need to be aware of their practices. Okay. If somebody tells you I'm going to get you pre-approved in 10 minutes without showing documentation, you might want to take what they say with a grain of salt. Okay. Not that there's not technology out there that allow you to get pre-qualified maybe or have all the information that you need in 15 minutes, but a pre-approval, unless they submit those documents to you beforehand, you're not going to get it in 15 minutes, no matter what they say. Okay. Unless you're typically, if you're sitting down with your spouse and your spouse is sitting there sending documents while you're doing the application part, that's different. But for the most part, if you see your mortgage advisor taking the time, doing everything correctly, educating you, empowering you on the way to a pre approval, take that more heavily that this person is actually looking out for your best interest, not trying to make a quick buck or sell you debt.
An
Because
actual advisor, not like
unfortunately,
a salesperson, right?
exactly. So you have a financial advisor that helps you with your investments. You have an accountant or CPA to help you with your tax returns. You have a realtor that's going to help you with your home purchase. You have a doctor that's going to help you with your health. You need a mortgage advisor to help you manage your debt, especially for your home. If you don't have somebody like that, unfortunately, it might be time to get a second opinion.
That's gold. I love that. It's huge. And I know you've helped a lot of people where you weren't even, like they couldn't qualify or anything, but you still walked them through the process and had a plan for them, right? So I think that's a true, like I said, advisor versus just someone that's trying to make a sale.
Definitely. I mean, I try not to give the answer no to anybody. It's either a yes or it's a not now, right?
Love
And
it.
if it's a not now, something I do that a lot of people don't is if they're not able to get approved right now, I set up a game plan for them. Step by step game plan, what to focus on, how to divvy up their kind of not responsibility, but kind of allocate a percentage towards savings, allocate a percentage towards paying off debt, allocate something towards, getting a better job to increase income or fixing your credit report, stuff like that. So those are things that are taking place if somebody can't get approved now. So if you feel nervous or scared, don't be discouraged. The answer is either yes or it's not now. And if you have a good advisor, they're going to set you up for the future, whether it's 3 months down the road or 2 years down the road, right?
Love it.
That's pretty much it.
Cool. All right. Well, I think we're about wrapped up here, but I do want to let people know what we've created that kind of goes along with what we talked about with this game plan. We call it the dreams to keys, right? Everyone has a dream of owning a home, but we've kind of created a checklist on how to get from that to owning a home. So Adam, do you want to kind of talk about that and let people know
Yeah,
how they can get it?
definitely. So no matter what platform you're watching this on, whether it's Instagram, YouTube, Spotify, wherever you're at, we appreciate a like, follow, and share this to anybody that you know that's looking to, you know, buy their first home or buy their investment home, even sell their home or even refinance. Send this out to them so they can get more educated on this. The more educated they are, the more confident they're going to be to make an informed decision. What this checklist is, it's going to give you, it's 3 pages. First page is what to do before you even start looking at homes. Second page is what to do it's a checklist of what to do when you're touring homes. And the third page is actually something for you while you're in process, right? So it's going to give you a step-by-step game plan. It's totally free. If you want this, whatever platform you're watching this on, comment plan or DM us the word plan and we'll send that PDF doc straight to you. And that's it.
Love it. Well, yeah, I guess we'll wrap things up here. And yeah, if you guys have any questions or want us to cover anything on future episodes, comment or message us and let us know. And I'm excited for the next one.
Let's go. 2 down, many more to go. Cheers. Coffee.
Cheers. Great coffee. I'll have a more sexy coffee drink next time. The black coffee is not
Me
always the
too.
best, but you know,
Me too.
awesome. All right,
All
Adam.
right.
I'll see you.
That's a wrap.